My dear students, welcome to an introduction to finance function. This is the topic which we are going to discuss today. See, finance is very important for any organization. No doubt, without finance, it is very difficult for an organization to survive. In such a case, the finance should be managed in such a manner so that it will give very good profitability and very good yield to the organization, because financial resources are very limited. In such a case, the person who manages finance is known as a financial manager. He will do certain activities and certain functions. Those functions are known as finance functions. See, financing function is said to be acquiring of the funds and utilization of the funds. See, my dear students, always the company will go on doing investment activities. If we are not going to do these kind of investment activities, we cannot generate income. It is true. Means the company will take the projects. So as part of taking various kinds of purchase of the assets, the finance manager has to make a decision how to fund for the purchase of the assets. See, clearly what I want to say is the finance function is concerned with acquiring the assets and funding for them. How to do funding for the purchase of the assets? That is a question. There are various sources for a financial manager to raise the funds. He can go for equity capital, he can go for a debt, he can go for bank loans, he can go for public deposits. So various sources will be there. Among all these sources, he has to select the optimum source which we will get finance by less cost of capital. Means here, making of a decision regarding funding of the fixed asset is the important element and important function of the financial function. See, my dear students, at the management level, at the MBA level or anything, what you need to do is you have to understand the concept. When you understand the concept, you will be able to say what is the meaning of finance function and all. See, the four important elements of finance function is nothing but, number one, acquiring the funds. He has to acquire. The sources of the funds is known as acquiring the funds. How funds are raised for the organization? Means by way of issue of equity, by way of issue of debt like debentures, by way of taking for bank loans for long term and short term and all. Means he has to acquire the funds by comparing cost of capital. So that is the very first function. Then the second one is utilization of the funds. Means whatever funds where you are investing, that should be in such a position so that it will give some kind of yield. Yield in the sense, without getting any profit, if you are investing in any one project, it is meaningless. So utilization of funds is another important element or important function of finance function. Then third one is increasing the profitability. Means always the finance manager has to see that the profit of the organization will grow quarter on quarter, year on year, likewise. Without profit, it is very difficult for an organization to survive. Means profits will boost the company activities. Means third important function is like increasing the profitability. And the fourth one is like increasing the value of the firm. There is a vast definition for value of the firm. It is not only profitability or something. The image, the brand name should grow in the market like anything. Means the value of the firm will give a path for profitability. These are the four important functions in finance function. These are the four aims. These are the basics of said to be finance function. My dear students, there are three approaches in finance function. Like very first one is like old finance function. There in 1920s and 30s, we used to see a function of raising the funds and all. Then the second one is like middle age. There we need to give some importance for finance and financial management activities and all. Now modern finance function, this is very important and the scope is very vast. you cannot say what is the scope of finance function. Why? Because that much larger is the scope. It covers almost all the operational and non-operational activities of the business concern. See, in every operational activity, there is a requirement of fund. Wherever requirement of fund is there, there should be some kind of finance function, my dear students. See, here comes what is the meaning of financial management is. The financial management is controlling and planning of financial activities. Controlling and planning and control. First we do plans, where to invest, how much to invest. Then we go on controlling whether it is according to the plan or not. Likewise, that is the activity of the financial manager. See, these activities of the finance manager also includes finance function. See, my dear students, at a glance, what I want to say is the finance function is funding for the fixed assets which are required to buy the firm. Means funding of the assets. Why assets? In the sense, when we acquire assets, we use those assets for generating revenue. You may purchase land for the purpose of cultivation.